Well, good morning, ladies and gentlemen. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you please go ahead and type the number 1 in the chat box, I would greatly appreciate it. There is absolutely nothing worse than talking to yourself for the next hour along the way. So let me know that you guys can hear me. Excellent, excellent. I appreciate that. Thank you. All right. Yeah, Baidu is definitely what we want to take a look at. I want to be looking at Baba today. There's a whole bunch of candidates I've got on my list for today. First, I want to look at pre-market and see what's happening in the pre-market right now. And make sure that we're checking out what the numbers are looking like before we get ourselves started here. So let's go ahead and shift over. I'm going to bring up just one single chart, which is the futures. Hey, laterally. Which is the futures on the ES, right? Look what's going on. You know, I put a video out this morning on this where I talked about the moves that we made. We were kind of flat coming out of that 6 o'clock open. We dropped down a little bit until about 11. We moved up and went flat again until we got into the European market. Big whip down and up, and then we've had multiple 1, 2, 3 retests of our 8 moving average before we went sideways here in that rectangle box, and inside of here was 830 where we had the economic reports, and nothing in there from the economic reports had any great movement on the market. We're stuck inside of that pressure cooker right now, so we're looking for a breakout from that pressure cooker. That's really what we want to see on the ES. Up or down doesn't matter. The overall pattern is down of the morning, you know, from the early morning until now. So the downward breakout would be a more advantageous breakout to start. All right. When we look at NQ, which is NASDAQ, right? Very similar pattern, right? Where we had the ups and downs go on. But the difference there, we went flat, down, up, sideways, and then back up. And then we had the same type of move. We failed, we retested, and this one finally broke back through. And again, we're getting at that bit of a rectangle right now taking place in there on the overall market, right? The NQ for the NASDAQ. So this is pre-market as we're getting ready for us to open up. We're about 4.5 minutes away. You can see a little countdown clock in the bottom right-hand side of my chart, right? Which tells me how much time we've got left on that position. I only have it on NQ. I don't need it on every chart. This normally is the view that I look at every day. To start, Bitcoin is down. I'm hoping it continues to slide a little more because I'm ready to add to my position. So get me down to about 28-ish or so is where we're going to look to add. Gold, kind of flat today, nothing happening. Gold's the bottom second chart where my mouse is now. Crude oil, I'm always happy to see oil come down because of the cost of gasoline, and we heat our home with oil and so forth. And then nat gas has been sideways and in a bit of a drop in there today as well. So I'm good on all of these, crude and gas making their moves to the downside. I do like what Russell's been doing lately, and this is the first trade I want to look at today, is the RUT. We're going to look for an iron condor. Guys, iron condor is a strategy that works best in a sideways, slightly up, slightly down market. If you are ripping one direction or the other, not the right strategy for us. We want some consistency. Ideally, you want flat, but not too flat. If it's dead, if it's just, you're not going to get any premium for your options at all. But if we stretch back here and look, I mean, look at this. We've been in this sideways market since early February, end of January, beginning of February. We've been in a sideways market. And I know some may say, but Rob, sideways, man, we've got big ups and downs now. We really don't, right? This is big up, right? That's big up. This here has been great. And if I just scrunch my, let me do it this way first, actually. So if you look at this green bar as an example, on that day, we placed one of these types of trades in iron condor, right? And I want the options to expire worthless. Somebody's paying me to put on the trade. I got to keep going. I need more space. Okay, beautiful. There's 2 horizontal blue lines down here, and there's 2 small horizontal blue lines up here. That's where we were. As long as the stock stayed inside of that $584 overall move, stayed in there, the options expired worthless. I keep all the cash. Life is good. I know some of you, yeah, Janet, iron condor, exactly. Some of you have been very focused on this trade with me. I know Voodoo, as an example, is really focused on this very heavily. It's a great trade setup. It's a cash flow. To me, it's ka-ching. It's consistently over and over and over and over again. Give me more, give me more, give me more, right? I want more money. That's what this strategy, this setup does for us, is just that, right? So we're going to look at the rut today as one of the trades we can do. Now, you can do this trade on the rut and you can do it on the SPX. I like it better on the rut. We don't see the whipsaw moves on the rut that you could on the S&P if some of the larger holdings, the Apples of the world as an example, start to move, right? So that could be a problem. Well, so Aggie, this is a great hedge strategy. It's good for up or down, right? We've got a couple hundred points in both directions to protect us if it makes a move. If you own an option and you think it's going down, the natural hedge is to buy a put. A big part of what I do in my retirement portfolio is I own SPY. I go out a year in advance, 6 months in advance, and I sell covered calls, taking a ton of premium. So I own the stock here. I'm giving someone the right to buy it from me here. And then I take that money that they paid me and I buy an insurance policy. So if we do come back and give us that 30, 40, 50% correction we've seen 2 different times in this decade on the S&P 500, then I'm protected, right? So there's multiple ways that you could hedge, but just straight out buying a put option is a great hedge, right? There's ratio back spreads. There's all kind of advanced strategies that you could do. Good evening, Stephen. All right, and we're off. There is the market open. Let's go and take a look at the actual equities. I'm going to switch this chart out. I've got it set right now for pre-market. I do all my work in the morning looking at a pre-market chart to see what's happening in there. So you can see SPY had been down. I use TradeStation. Guys, you can use any broker you choose, any software you choose. I like TradeStation very much, right? So we're down on the S&P, not surprising. Why? We just said that in the pre-market we were down on the ES, which is the S&P 500. So we're going to take a look. Now, I'm not ready to jump in to do anything just yet. I want to see the first 5 minutes kind of pass us by before I do. But what I do want to look at in the meantime, and I'm going to open these charts up, is let's take a look at AMC. Now, we talked about this last week, and I told you that I am backed away from my naked puts on AMC and on Gamestop. And I said you could do them at these levels, but they're more aggressive because of the pattern that they're showing, right? If we go back in and look here and go to AMC, I get a little bigger picture, too big. There we go. This is a good one. All right, so what's happened? We were hanging out up here above this 48. It was great. But once we took on this rounding top pattern, right in here where we kind of showing that rounding happening in there and just rolling over, and we broke out of that range, that zone in there, and started to play in here, that was kind of the, I went from number 3 position in the chair, leaned forward, to the number 1 position in the chair, sitting back here. I wasn't comfortable with that setup. And once we broke through this 48, it was very clear that things have changed. And, I know you got the Reddits out there, they're driving traffic, right? They're driving the product, they're driving price. We had this move down, we had this move back up, and that's what I mean. And then we get what is known as a falling 3 pattern, right? If I really zoom in on this, right, we get this falling 3 candle pattern. You got this great bullish move, right? Boom, boom, boom. We get these 3 candles down, right? And we just get this continuation burst to the downside. I talked about if you wanted to be aggressive, sell down below that 33.26 level. Well, we violated it today on the open. We've bounced back a little bit, but we're not in a position, to me, to be looking at anything on this at this point. I need the moving averages to get back in the right order, which means the 8, the pink line, has to be on top of the green. And then price has to be back above there. Then I will consider selling naked puts. if the moving averages stay in this order, but price were to move up, so let's say that the moving averages stay just like they were and the candle moved up here, I would consider it, but I would do a small position at best. I would not do my normal. So if your normal is to pick a number, 10 contracts, I might do 2 or 3 or 4. I would not do the full 10 in there. I would back down my quantity of what I'm looking to enter in. All right. So that's AMC. Let's look at GameStop, GME. Get the bigger picture. GameStop, same scenario, guys. Let me bring it in a little bit. So on GameStop, we were hanging out in this range right here. Right? We were in that rectangle, in that zone, what we call pressure cooker. Well, we broke, and we broke to the downside. And once we did, we pushed down below that 193 half level. Now, I've been selling 140s on GameStop. Right? So I've been selling way down here. Way down here I'm selling, okay? But look what's happened. We now broke 1, and we're at our second line. Each of the fib lines, the way that I've got these set up, the way that I trade off of these, I want you to consider each Fibonacci line as 1 standard deviation move. We normally see 2 standard deviation moves, but and then a little bit more, it's 2 plus, like 2.5, 2 1/4 lines, and then you start to get a reversal in there, but you're going to have the breakout. It doesn't mean that it never goes more than that. When you get the pressure builds and explodes out is where you get a bigger move. Well, we've moved 2 lines already. Does that mean it's going to bounce now? I don't know. But my moving averages are in bearish bias right now. My 8 is down the downside. So I am not ready to do anything on this that I'm going to get myself in trouble as far as going long. Would I buy a put option on it? I'm not. Because there are still those Reddit traders out there. And hey, kudos to them if they can move the market, that are still going to push to get this thing to go up. But last week I talked about AMC had sold off a bunch of their shares, and I had said it was a good thing, and someone questioned it. Is it really good? That's crazy. It's to the moon. And I get it, guys, that's the motto for it. But if I got out of that share at AMC at $57 and now it's trading at 33, I'll wait for a bounce point and get back in again. So kudos to them for what they did there. All right, let's take a look at, let's see. Let's go take a look at the rut. Where are we at? We're at 935 now. Good. So let me bring this back here. Let's go ahead and grab the rut. And I really want to set the Iron Condor up right now. So what we're looking at, an Iron Condor basically does 2 different spreads. It does what's called a bull put spread. So down here at the bottom, and it does a bear call spread up here. As long as it stays inside of that range, we keep all the money. If it goes against us, and it will, usually twice a year, you will have that trade go against you. But if you follow these rules and it goes against you twice a year, it represents about 40% rate of return for the year. It's not killing it, but it's definitely better than what happens in the markets, right? The normal move of the S&P 500 being 8 or 10%. And I know there are years that it's more or less, but on average for the last 100 years, it's about 8 or 10%. If it stays in that realm and I could pick up 40% and it's something I just kind of set it and forget it, I put it off on the side, set my exits up and walk away, life is good. So let's go take a look. This is the way you set it up. And I want you to practice this trade. If you know anything about options, anything at all, I want you to practice this trade. If you're using TradeStation and you want to duplicate exactly what I do and practice this, don't do it for real money. Guys, if you don't understand this trade, do not do it for real. I want you to go set this up in your practice platform to learn the process, right? Because if you've heard the expression deer in a headlight, right? What does that mean? Well, the understanding is that if a deer gets caught in the headlights, it freezes. Why? They've not had it happen before. They don't know what to do. It's a horror movie. When you see the person is going, ah, as the guy is dragging on a club foot and getting very slow to get to them, but they can't move. They're petrified. They don't know how to react. Same thing with a trade. If you don't know how to react, you're going to be stuck. And if you're stuck with real money, it's not a good place to be. So the first thing I'm looking for is about 60 days out in time is where we're going with this. About 60 days. So we've got an option that's 63 days further out, we're going to open that up. We need to see all strike prices. That's critical on this. We need all strikes. And we're not going to do single. We're going to do vertical, a vertical spread. All this means is it's a credit spread, right? We're just choosing vertical. We're choosing two different options there. So I am going to look in my midpoint, right? My mid price, I am looking for 50 cents. So I'm scrolling down, scrolling down, scrolling down. They're out of the money options. I'm looking for 50 cents, 50 cents. Let me get my pad here. Okay. So I've got 70, 260. All right. So right here, that is too much of a spread. So I will not deal with this. Let's see. I won't trade it if we've got a $10, a $50 increment. I'm looking for tens. So 24.40 by 24.50, that's what I'm looking for. Let's see. We've got nothing else that's down there. Never trade it with a $50 increment, guys. Never, ever, ever. If we're looking at 23.30 by 40, I'm sorry, 24.30 by 24.40. That's what we're looking at right now on the 63 days out. I'm going to go and look at 47 days. The 63 is prime. I like 8 weeks out. But if I can go to 6 weeks, we'll look at that as well. But I can't do a $50 spread between the two strikes. It's too big of a risk that we're dealing with. All right. So if we look at mid price, so we have the 50 right here. Okay. So 24.30 and 24.40. We can get 50 cents for that trade. So what are we going to do? We're going to sell that trade, right? And I'm going to change the contracts to 1 just to see. And again, I have my Condors already set up, right? I have my Condors already set up just to show the example of what we're looking to do here. So what's happening here? We're going to buy the August 31st, $2,440 call. So way up here, 24.40, and we're going to sell the 24.30. So just below it, one strike below, or $10. Write that down. It's a $10 increment is what we're looking for. So we're going to sell that option. And what we're looking for is we want to do them as a married position. So we don't want the market maker to choose. We don't want the market maker to choose, oh, I'm only going to fill this one or only that one. We want the market maker to take the entire trade. So you can see right here that my natural, I get a 10-cent credit, right? I'm not looking for 10 cents. That's on the bid. I'm not trying to get the 80, although I'd take it if I could. I want the 50, right? I want the 50. So I'm going to go ahead and click on the 50, and then let's go click place order. Very important. Read this out loud. The RUT, August 31st, 2021, short vertical call, 50-cent credit limit order, all right? Sell to open 1 August 31st, 24.30 call. So we're selling the 24.30, and we're buying to open 1 August 31st, 2021, 24.40 call, right? So we have a $10 increment in there. Our goal is to get a 50-cent profit, right? And we're only doing it for the day. Don't leave the order sit out overnight. If you're not filled today, put it in again tomorrow, but don't leave this sitting out overnight. Right now, it's moved. The natural right now was just 50 cents, and our mid price was 50 also. So we're going to click yes. That order is now loaded. You can see it at the bottom of the screen. It's now loaded in there. So that's half of the trade. We did the calls. We now, for the exact same expiration date, which remember, August 31st, we now need to find the puts. And we did 40, 30, and 40. Okay. And this was on the calls. So let's go find, and the rule is 50 cents. Now, if you have multiple 50 cents increments here, I'm going to choose the one that's the furthest away from where the price is now. The furthest out of the money I can get. We've got 3 of them. So you got 1820, 1830, and 1840. Well, I'm going to choose the furthest one down. So I'm going to choose the 2030 leg, right? And we're going to click on sell. right? So it shows it's 0 by 90 right now. So let's change this to one contract. And whatever you do on the calls, you want to do on the puts. So in other words, I don't want you going out there and saying, oh, I really think this is going up, so I'm going to do more of the put spread. So, oh, I think it's going down, I'm going to do more of the calls. No, this is an even keel. Whatever you do on one side, you do on the other. There is no unequal weighting here. You weight the exact same on both sides of this trade. You trade the same number of calls that you do the number of puts. All right, so we have 50-cent credit here. That's what we're looking for, 50. Let's click place order. And again, read it out loud. August 31st, 2021. It's the 1820, 1830 short put vertical spread 50-cent credit limit. Buy to open one RUT, 31st of August, 1820 put. Sell to open one RUT, August 31st, 1830 put. We're doing it for the day. We're taking in 50 cents of premium. Once I've got this locked in, I now click yes. Both of those orders are loaded. And that was the 1820-30, I believe, right? Yes. It was 1820, 1830 puts. Okay. So now we've got both of these orders set up. Let's go lay this out on the screen, on the chart, and see what it looks like. All right, beautiful. I'm going to scrunch this down a little bit, and there's a reason for it. All right. I've got a couple lines already drawn in there, so I'm going to delete these for now, just so I can make this a little bit easier for us to see. All right. So I'm going to start right about here. I'm going to drag this out here. Okay. So I'm going to modify the price on this line. All right. We're going to make this 24.30. We're going to duplicate it. We're going to make it 24.20. 40 rather. All right. So there are the two legs on the call side that I sold. So let's go change this one to 1820. And we'll do one more, and we'll change it to 1830. Now, we only have 45 days that we're in this trade, so we're going to be a little bit closer than we would have been. Oh, I think I duplicated it the same way. Let's try this way, 1820. All right, nope. So I must have moved it. I must have typed in the wrong number. 1820, we'll change this one to 1830. All right. This trade is now set up that you can see where the risk is. If you look at the difference of where we're at currently, we take our current price. That's about where we're sitting right now. You can see that we're not really in the middle on that line. If we look at the dollar difference in there, and I may be off by a little bit, but I'm not trying to get exact. I'm just trying to get an idea of where we're at. We've got $228 protection to the upside. And we have $371 protection to the downside. So remember, we've been in this flat-ish type market for months. The market maker knows this, but they're putting an emphasis that they need to give more room to that downside because there's a bigger move potential to that downside, right? So that's why you're seeing that disparity between those numbers in there. All right, so what's happening now? If we look at this, we've got an overall range. If we do this as just $1 sign, one line rather, we've got an overall movement potential in here of about just under $600, right? The last time I did it was 583. This one we're looking at 596. So it's about the same range of where it is. And you'll see that if you look at these lines in the past, that's where we did the trades. That's where they were. You had the risk up to here, and we never got anywhere near any of those lines at all. All right. Let's see. All right. What are you guys thinking on this? You like it? Guys, we're talking about a trade that has an extremely small potential of going against you. How small? Talk to me in the chat there, guys. Let me know what you think. How small? I'm going to remove this from vertical. I'm going to change it back to single. If we look at the put options, we did the 1820, 1830. Right? If we look at the 1820, 1830, we've got a delta of 6 on one of them and 7 on the other. Right? So what is that telling me? That tells me that I have a 7% chance, 7% come expiration that this trade goes against me. That on expiration day, there is cash value in this trade. Right? That's how small of a chance there is. Let's look at the call options. That's on the puts, 7%. We look at the calls, we're looking at 24.30 and 24.40. 24.30, 6 and 7. So again, you've got a tiny risk of this trade going against us. Very, 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 very small chance of that taking place. All right. This is a trade that you set it up, walk away, and it just cash flows over and over again. You do this every 30 days for 60 days out. So if you start today, if we were able to do this 60 days, you'd wait for another 30 days to pass and you do another one. Now you have the old one open and the new one open. By the time you get to the next 30 days, one is closing out and you open a new one. You always have 2 open positions on this at one time, which I do right now. I've got my 2 already open. Right? Good. MB said LCPL just made $900 profit. Nice. Very nice. Cool. All right, let's go back and look at what's happening here, guys. I've got a couple of stocks on my list as potentials for today. We look at the S&P. We're down 10 points right now. So one of the things that I look at every day is the SPY. I love to day trade SPY. So what's happening? We've got SPY pushing up into that 435.22 level, right? We're looking at, is there an opportunity to take a short? And if we do, by buying a put. If we do trade that to the downside, we've got about, we're only looking at about, it's $1, $1.25 is the potential move to the downside, right? To about 434. If you're looking at this, if you're interested in this setup, which I am, we don't need all of these. Let's just get 20. Trade station is loading. Very nice. There we go. Okay. So if I'm trading this, day trading it, I'm trading what's happening today. The shortest possible option, which expires tomorrow, is the one I'm going to look to trade. All right. So what does that do for me? I am looking here at somewhere between 65 and 85 on my delta. I will normally, on this shorter period of time, I will be looking for that $3 to $4 option. So somewhere between the 431 and 432 is what I would look to trade. All right. And what I'm looking for there, if we, and that's bullish, but we're looking for put. Sorry, my bad. Right. We're looking at a put. We're rolling over. So let's look at the option. Let's go back here. What are we looking for? Somewhere between that $3 and $4. That's 65 to 85, but I won't go over 85. So I can get the 438 put for about $3.40, right? If you are so inclined, go ahead and sell it, right? And it's trading right now at 340. I would probably not negotiate on it. I would just pay the full price, which is about 348 right now, right? We're dropping down, which is what we want. You see the price of the option start to climb. And your exit on the trade is going to be somewhere down. At least you're going to physically watch it and consider pulling out there. You get down to 434. Well, if we have an option that moves $1, if the option moves $1 and our delta on this option is 84, we'll call it 85 by the time it gets there. If our option is 85 cents, right, that means, I mean, our delta is 85. We're going to see an 85-cent increase in that option. You're taking an option that you bought for $3.50 and you're looking at 85-cent increase, call it 75 cents, right? If you do cash in over cash out, if you say 3.5, actually we're looking at cash in. So if you say point, you're not going to get all of it. Let's say it's 0.75. Cash in divided by 3.5. That's a 21% rate of return, and we're looking to get that today. I will not carry this position overnight. And how hard is it for SPY to move $1? It's not, right? If we back the chart up, you can see this move yesterday on the gap up. The open was 438, and it dropped down to 435. It was a $3 move. This move here, 435 up to 430, almost 437, almost a $2 move. So you can see a $1 move take place in the SPY fairly easily on the setup. All right. Ciara said, playing puts makes me nervous. LOL. You have to have funds to buy 100 shares. No, Ciara. No, there's definitely, and this is where, the expression I use is a baseball cap, right? It's most people wear the cap like this. Sometimes if you guys see some of my morning videos, you'll see me wearing the cap backwards, right? That backwards cap is what you're thinking of, CR. When you buy a put option, and if you spend $3 on the put, your maximum risk is $3 in that trade. If you are a seller, and it's what you do on the opening position, BTO, buy to open, you're long. Your first entry was a buy, you're long. Then your risk, your maximum risk is what you put into the trade. If you have a sell to open, your risk changes there, right? That's where you have a greater risk and you may have to buy shares. But if you buy the put, CR, you don't need to buy the shares. If it goes against you, you bought the option for 3 and now it's worth 2. You sell it for $2, call it a day. You may not like it, right? But you kind of brush it off, you lick your wounds and you call it a day and you move on to trade again tomorrow. Sure, let me know if that makes sense. To sell the put, you need to have the cash. To sell calls, you need to have the position. Well, okay, so James, you're partially right. You can sell naked calls and not be required to have a position. It's all a matter of what your broker allows you to do, right? I have the ability to sell naked calls, which means I could sell a call against a position that I don't own. It all depends what your brokerage firm allows and what your risk profile is. I will tell you right now, there are probably very few of you that should ever sell naked calls. Ever sell naked calls. Guys, the risk is unlimited. You sell a call, they pay you $1. How much risk do you have? Literally unlimited. How high can the stock go? Infinite. So your risk is a lot greater in there, right? When it comes to, here, let me just clarify with what you said there. Can't read it without the glasses anymore. To sell puts, you need to have cash. So again, it doesn't necessarily have to be cash. I sell puts in my retirement account. It's called puts for cash. I need to have A, cash, or B, an equity that's worth the value of the cash. And it doesn't have to be the same. I could own Apple shares and I can sell a call against, I could sell a put on SPY, right? As long as I have the cash value in my account, they'll allow me to do it. It's called puts for cash. And again, that's broker specific of if they allow it or not, right? But if I buy the put and I buy it for $3, my maximum risk is $3. So you can buy to open and sell to open. When I sell a put, I don't need to have all the cash if it's not a retirement account. If it's a margin account that I'm allowed to bring money in there, I only need to have the maintenance margin, which is 25% or so, the initiating margin. 25 to 50, depending on your broker, I guess. Brokers are different on that number, right? But valid point, James, that there are differences between the buying and the selling. Good fella. Man, I appreciate that so much. Where have I been? No one has explained options better. Awesome. I love it. I love it. That is fantastic. All right. The goal, listen, the goal here, I could talk really big strategies And, I heard Spencer in the pre-market show talking a little bit about this show coming up. I could talk way up here on what we do and just have your head spinning, but it will do none of you any good if I can't get you to understand the basics of how options work. I've been teaching this since 2001, actually. Since 2001, I've been teaching the strategies to people. I've taught over 100,000 people around the world, okay? I've got a good understanding of what it takes to understand it, and I can thumb it down fairly well that most people can grasp what we're talking about. Zad said, do I have any courses, offerings? Yeah, we do. I have, tons of different things. We're a fairly large company. We do everything from equities to options to futures to Forex. We help to train brokerage firms. I mean, we really step out in the things that we do. But probably the easiest thing to do to start is I put out a free newsletter. It's at least twice a week, sometimes more. And it's a video, and it really is predicated on what the market's doing right now. And what I do is I put out a video and I show you all the details of the trade, right? So as an example, let's see, Visa is one of the last ones that I did, and I'll share all of them with you. I'll show you every one of them because I track every single one of these. So Visa, I put that order in on Visa on the 7th, right? So when I say the order, this is where I called it out. It had gapped down, it moved up, bounced, and we took the trade right here on the 12th. I had said if it went against you, here's your stop, 235. Your first target was 40 3/4. Your second target was 45. We hit it in 2 days from when we got in. We got in here 2 days later. We're done, baby. We're out the trade. It's a video, 3 to 5 minutes long. Right here. You know what? Let me share it. I've got this here, so I might as well bring it in. This is what we've done since May 20th. Where are we now? The 15th? So almost 2 months. We're up $7,200. 15 trades. 3 of them never were taken, meaning we passed. The entry was not hit. This one right here, CLX, we were still waiting on CLX for an entry. All right, let's see if we got one. Right, so waiting for the rollover to take place off of this level. So right in here, either you are a more aggressive trader that it moved into that level and failed today, you take it. Or you're waiting for a close there and a move down tomorrow and you take it there. Either way, the targets are all in place. Sorry about that. The targets are all in place for this trade, right? Everything is set up. Everything's ready to rock. Excuse me. All right. If you go to tradewithrob.com/go, what I have right here on the screen, all you need to do is put in your name and email, and we email you. And you can put in a text if you want to get text instead. And we email you to tell you, hey, a new video was just posted. You'll have plenty of time because it comes out the night before. So you can watch it at night, you can watch it in the morning, but it comes out usually by 5 o'clock. That video is published out there. Let's see. Michael said, I need to watch you every day. I almost understand. I only had $500 account, so all I hear is do options. Yeah, Michael, and we do tons of free stuff on our website. We do YouTube shows in conjunction with what we do with our Zoom. So every Monday at noon, every Friday at noon. Friday are the other coaches. They take turns, the other coach that teach me. One of them is a CMT, a chartered market technician, so he's a PhD in options. One is Tony is the pattern whisperer, right? Phenomenal pattern trader. And then Ryan Litchfield co-authored the latest book with Gregory Morris called Candlestick Charting Explained, right? Ryan is another coach that teaches for us. Between the 4 of us alone, we've got over 100 years of experience of trading options. I started in 97, right? And then there are others in our company as well. Amelia, who's our lead trader, our head trader, she's about as much experience as I have as well. So, all right. So this is awesome knowledge. I need to review this video. after the market. Can Benzinga group these regular guests in a playlist? Oh, that's a good idea. That's a good idea. Hey guys, can you drop the link for tradewithrob.com/go? So Lee, if you took the trade on SPY right now, yes, it's moving back up, right? So anytime the option move back up, you're going to have a risk in that trade. So I don't remember the strike. Oh, actually, I can see it. So I think it was 350 when we looked at it. 336. 336. So you're underwater. If you took the trade, you're underwater by about 40 cents. So yes, but that's the great thing, guys, is you've got a very small risk in this trade. You're not taking on unlimited risk. Who is my competition? There are plenty of companies out there that trade the market. There's plenty of guys out there that do it. There are very few of them that do it at the level that we do at all. So you get into some of the major companies out there, but some of them have had some issues lately with FTC and such, right? For us, guys, what sets us apart is everything that we do is predicated on strategies working. And every one of us document and detail every single trade that we show. Every one. Brandon does a live training room every 3 days a week on futures. He pulls in somewhere between 7 and 15 grand a month. I do an options training that we pull in some, well, heck, let me open it up. All right. Here, guys. Again, I heard Spencer talk in the pre-market that we talk about some of the trades that we've just done, right? These are my positions, guys, right here. The ones on the top above row 9 are already closed, right? They closed out. This one closed out yesterday, PANW, okay? 12, 13, 14. These have closed out positions. Here's the entry date. Here's the price of the stock. The number of contracts we did, up. U is up or bullish. D is down bearish. I tried to do B for bullish and B for bearish. It didn't work so good, right? Did I take any exits along the way, or was it just one exit? If it was one exit, we put it under the stop out. So for CMG, Chipotle Mexican Grill, we're up $4,524. That's locked. It's closed. It's done, right? And that's assuming you took the trade the same way that I gave the rules. That's what we're documenting here. This is how the trade pans out if you follow all of the rules, right? MasterCard was another day trade. We're up 1170, right? Roku is another day trade. We're up 3,900. Facebook was a day trade. We're up 3,900. PANW was a swing trade. We have multiple exits. So you'll see down here in this line 20 with the yellow bar, it says note, aggressive entries, Forex taken. We're going to exit 2 contracts, then 1 contract, then 1. So my first exit right here, I got in when the stock was at 378. My first exit on this bullish trade was at 380.5. And that was on the same day I entered. My second exit was 388.5, same day. My third exit took until the 14th. Yesterday, we were actually stopped out. It was moving up and had backed up to our stop point. We got taken out when the stock was at 386.50. And we are up $1,872 on that. Right? Google and SPY are both trades that we've got open right now. So if you look at Google, we got in Google on July 1. So watch. Let me show you the Google. All right, so buttons. Where's July 1? So we got in Google right here. So the call that I made on that setup, on that trade, was we were looking for a move up, right? We were looking for that move up. Actually, let's see. So if I got in on 7-1, that would have been 630. Google. Oh, okay. There we go. Bullish above 2447. This was the actual action sheet, our trade log of what we were looking to do. Every single candidate that we track, this is what we were looking for as a potential entry. This said bullish above 2447. So if we go back to July 1st, right here, we opened up at 2434. So we're not in. We had a high of 24.51. We got in that day. So we took our entry right there. Our first target on Google, bring it current again. The first target on Google was July 2nd. We got out at 24.89. So the second, boom. So 24.90 and a half was our resistance. We got out just below that, 24.89. Our second target was 25.13. We got out of that on July 7th. And that was one contract. So July 7th, right here. And now we're watching this blue line, our moving average. If we close below the 5, we're out of that trade. And here, if I put in right now 25.59, if I closed out this trade at 25.59 and I had one contract, we're now up 11,700. We'd be up about 20 grand on this trade if I shut it down right now. So, yeah, it's Google. Exactly. But I like the L. I like the L. Google. I don't trade the Goog. I trade the L, right? Shares. So I have traders that follow along with this and only trade one contract. They take the first exit. They take the first exit. So RX said, do not have a small account. It's hard to play with. I think you mean if you do have a small account. If you have a small account, I do two different setups like this. We do this right here, the 20 I just showed you guys, and I have something called Pop 5K, which is much lower price stocks that we trade the same type of patterns off of the same exact way, right? And the test we ran on it, we did for 3 weeks, and we were up about 6 grand on a $5,000 account. I think it was about, it might have been 5,000, 5 or 6,000 in 3.5 weeks when we first started it out. So, and they were all day trades. So in and out, in and out, in and out. Right? Now, guys, am I saying that you're going to get the same results? No, but what I'm telling you is every one of these trades were called out. We got to go back one more week. Every one of these trades were called out, and there was the one on Google, and there was the trade we took. Right? And this is done to a group of hundreds of people that I do this with. So when you say what sets us apart, we're actually walking the walk and doing what we do. Right? And here I come on to a show like this, and instead of saying, hey, come and pay me to learn this stuff, we do it all for free. We're teaching this stuff to you without holding anything back. I give you everything, every detail of the trade. I don't not answer the questions at all. Right? So let's move this out of the way. And let's keep looking, guys, because we're running out of time. What stocks you guys want me to take a look at? Someone had put in Baidu before. Try that again. So Baidu, I needed to get down below that 177 level, 178 level for me to take the bearish trade. Little bit tough for me to do anything on it here. All right. So I would need it to get back down below. Right. Here we were last Thursday. We took this last Thursday as a day trade. We weren't swinging that. This was a day trade. I would not be taking that gap down as a swing trade because of this fill the gap, or what's known, again, if you look at Gregor Morris's book with Ryan Litchfield, Candlestick Charting Explained, it's closing the window, right? We don't like the open window. We fill the gap, right? So that's gone, right? So that happened. Get back down below the 178 level, and we'll take a look at it. All right, good, Michael. Hey, listen, whatever works. Again, I don't care the broker. If it's Webull, if it's the other one online there, I can't think of their name right now. The one that just got sued because of what they did with GameStop and so forth. Anyway, any of those less expensive online brokers, whether it's TradeStation, TOS, whomever. TOS, I don't know. The last time I checked, they did not have a minimum on their account. I like TOS a lot. They're good. Sure, SPCE. You got it, Sam. right? Which is SpaceX. Okay. So think to yourself, what happened here? With all this great news, the rocket worked. Branson made it back okay. Why is it going down? The expression is buy on rumor, sell on news or fact, right? The fact is out. It worked. Okay, there's nothing to push it back up anymore. We need more good news. We don't have it right now. So you see this sell-off taking place in there, right? We are in a bearish, so we're in a bearish bias right now. We're not true bear. My 8 moving average is still up higher than my brown line, which is the 55. I would want to see, for a true bearish move, I'd want to see over to the left of the chart, the 8 is on the bottom, the green is in the middle, and the brown is on top. So if I were going to do anything with this, I would do it as an aggressive trade. And it would require a retest of the 35, and then I'd be shooting for 30 as my target. My first target, 27 is my second. Keeping in mind, earnings are less than 3 weeks away. That's that yellow bar there. It shows me that where earnings are. I change that every day. So I've got 3 weeks of time. It's an easy visual for me to know when earnings are coming out and I'm not on the wrong side of that trade. Robinhood, thank you, Lee. That's who I was trying to think of. I could not for the life of me come up with it. I have an account with them. I just couldn't come up with it. FBIO. All right, let's look at FBIO. Tough trade. I mean, it's $3. Where does it go? Was this one of the Reddit ones? I don't know. I only follow GameStop and AMC off of there, so I'm not sure. But these guys do not. It's tough. I mean, how far down does it go? You know what I'm saying? Where do we? Can you even get an option on it? FBIO. There are options, but they're monthlies. There's very few of them. Wow, look at that big increment. Yeah, no, they don't want you to trade these options. That's why they did them the way they are. So tough call. For me, I stay away from stocks this lower price, but I would only trade it bearish. Look at the moving averages. That is a true bear. But where's my next support level? And now you're talking about shorting a stock that's at $3. And if it pops and moves its way up to $4.50, you're underwater 50%. So a little bit of caution on that one. Sam said, first timer here. Can you show how you draw your fib levels and when you redraw these levels? Sam, I could never do it in this amount of time that's left. It's impossible to do all of it. But here's the rule for drawing it. And the redraw is where it comes down to. I took one of my highest level coaching groups, my mastermind group, Tuesday night. This Tuesday, it just passed. And we spent an hour on drawing fibs on 3 charts. An hour on doing them on 3. And we're talking about people that are experienced at it, right? And the reason for it is, the reason we did it that way is we looked at all the nuances as to the whys. We picked stocks that were very much going to be difficult to draw Fibonacci's on. But on this chart, here's the basic rule, Sam. You're looking for the largest directional move closest to the right side of the chart. I need V bottoms and V tops to set this up. So here's my V bottom. Here's my V top. All right. That's the largest directional move closest to the right side of the chart. So I would grab my Fibonacci tool and you come down to the lowest low of the wick. We do not draw off of bodies. We draw off of wicks. And it will snap right to the top wick. All right. And then I go ahead and drag it out to the right. And that's on this software program. On other programs like TradeStation, it doesn't snap. You really got to get it right to get it there. On this program, it snaps right in to the wick. Right? So what happened? We had a tremendous move up, a good pullback, right? And in a recovery, remember I talked about 2-line move? Well, gee, go figure. Had no intention of showing this or drawing this, or I didn't pick this stock. As we bottomed out, we moved up one line, two lines, and about a half. That's about the normal move you're going to get when you make a move, okay? So when that reversal came in, one line, two line, and a little bit. 2.5 lines before it went 1, 2.5, and returned around. 1, 2.5, and it turned around. 1, 2, a little bit. You guys see where I'm going with this? All right. The redraw is if it violates what is known as the 882, which is what I put in as a fibit, something that I've developed on fibs, is a time to redraw. Or if the move is bigger, you would redraw again, right? If the new move is bigger than the one you have. Time to sell puts on AMC. Has AMC recovered? Yeah, you could do it. But here's the thing, right? I teach in a live workshop. I do this in front of a room. It was a lot easier to see and understand because if I stand up, you won't be able to see me. But I stand with my hand behind my back. And it's here, kitty, 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 wham! With a 50-pound sledgehammer. You could be getting set up right here as a head fake. You know, we've had it, and look, it's happened before. We had that move up. Now, guys, this is not your normal stock. AMC, Gamestop, the Reddit stocks are not normal. Could this be the bounce in the recovery? Absolutely. But we saw this happen right here, and it failed right into that the very next day. So I won't be selling until we get above our moving averages and everything is set up properly. I won't be selling on AMC at all. Right? So I want to see us back up above the moving average. In other words, I want to be back up above the 48, and then I'll go back and start selling again. But not until we get above the 48. For me, that's my risk profile. What's the best tool for looking at option Greeks? CR said. It's right on TradeStation. It's right on TAS. It's on every major broker that has options. They're on there. If we go ahead and look at Apple. I need to check that today anyway. Okay, good. Apple had a nice little pop this morning. So we look at Apple. I have on my chart now, my option chain, I have Delta. I have Theta, right? I have, that's theoretical rather. Sorry, this theoretical value. And I have Theta. I don't have Gamma. I don't have Vega. I don't have Rho, but I don't use Vega. I don't use Rho, right? I do use Gamma. But it for you guys, it just makes the chart smaller, so I take it off, right? Here's my Gamma. Right? Gamma is rate of change of Delta. For every dollar move, on the stock price, on Apple, this option right here, the Delta is going to go up by 15. So we're at 52. We're going to go up. If we go up $1, we're going to go up from 53. We're going to go up 15 points, which puts us at 68. Right? That's what Gamma tells us. Right? Theta is time value deterioration, but they're right on an option chain. Alaska, DD is interesting. I think DD had an opportunity to do something really good, but after this, crazy news with what's going on in China, and I didn't even see it today. I mean, I liked it at $20, but all this negative news from China, you got to be really careful with it on DD. And you don't have any real good info on it yet. MP, Aaron is asking for. All right, so why does this not look like it's very? Oh, okay. All right, so man. First thing I notice here is we've got a nice uptrend going on in there. Right there. So what I'd be looking for on MP, MP materials, not sure who they are. I don't know the subsector, but there's nothing there. They're not in the sector. But if we can get back above that 8 moving average, which is the pink line. So basically get me back above 36. I got a chance to move up to about 42 is what I'm looking at in there. right? On MP. Just caution grasshopper. So Goodfellow said, so what sort of funds do you need to trade options iron condors for blue chips like Apple, Google? Iron condors, Goodfellow, do them only on the RUT. Do them only on the RUT. Don't do an iron condor on another company. Not until you are a master at doing it on the RUT, which is the Russell 2000. On the Russell 2000, you need $1,000 to do the one contract we did before. That's it. You need the difference between the two strike prices on one side. If you did a 140 and a 141 put spread, let's say, you would need $100. You did the same thing on the calls. Well, you don't need both. You don't need 100 on both. You shouldn't. Your broker might ask for it, but they should not, because he can't go against you on both sides. See, RUT options are European style expiration, which means they can only be exercised on expiration day. Apple or American style, they can be exercised anytime. There's a whole caveat to why we don't do other positions. Michael said, Didi, if you want the risk, learn my lesson with other China stocks. Yeah, and a lot of them are getting in trouble now. And they're talking about delisting a lot of these companies. And I'm not saying good or bad for Didi, right? They are where they are. They are who they are. They're doing what they do. And that's it, right? It is what it is. If you're a China stock, you're running the risk right now, if you're dealing with them, of some of the delisting taking place. So you got to be careful in there. Guys, don't forget, and gals, right? Do not forget, go ahead and grab that link right there, tradewithrob.com/go. We do a YouTube show every Monday at noon. We do another one every Friday at noon on our YouTube channel. So go check that out. You can come watch tons of free content on our website, WealthbuildersHQ.com. So guys, come check it out. There's a lot of great stuff, if you like my teaching style, then come on and check out what we do. We do this stuff over and over again. We're pretty good at teaching people what to do. And on this trade setup, we only did 2 contracts, $7,000 on 2 contracts. What if you would have done 4? That puts you at 14 grand. What if you did 10? That puts you at 70 grand. See where I'm going with this? Oh, no, it would put you at 35 grand. Sorry, my bad. Because that's 2 contracts, right? The opportunities are there. You just have to make the decision of, yes, I want to do it. This would be a great way for you to start to see the setups that we do, right? And this is only one trade setup. It's the exact setup every single time. Every time I do the same thing. Consistency. The strikes on the RUT trade were 24.30, 24.40 on the calls, and 18.20, 18.30 on the puts. Good fellow. Love your teaching style. I appreciate it. Guys, show some love. Come on, give me some likes. Smash that like button, guys. Let's go. That is interesting. I didn't know about the RUT options were only exercisable at expiration. Yeah, it's because they are American style versus European style. That's what it comes down to. Guys, that's what 20 plus years of trading the market. I started in 97, right? 17, 18, 19, 20. Wow. Okay. 24 years. That's long. I don't know if I've done anything for 24 years outside of being married and trading the market. So very good. Very good. So Aaron, you there or Spencer? You guys in the back?
Yes, sir. I am here with you, Mr. Robert.
All right. All right. Yeah. So guys, go pick that training up. And what'd you think, Aaron?
That was great. I mean, I learned a lot. I hope the audience did too. And yeah, please smash the like for Robert. Leave a comment. Let him know how much you appreciate it. And we'll be back next week.
You got it. All right, everyone. Take care. I will see you then.
See you, Robert.
All right. Bye.